are in listen-only mode.
Thank you for attending our webinar today. My name is Jim Guinan. I'm an annuity sales director here with Insurance Agency Marketing. And today we have our special guest presenting information and some ideas for you from Great American, which is Sean O'Connell. And Sean is a sales manager. He's our contact with Great American, and he will be sharing with you some great updates on some very competitive products with Great American and talk to you a little bit about Great American's history and financials. Before we get to Sean, I have a few things I'd like to go through with you. As some of you may know, that we do have a couple ideas and some topics that we like to share with you on our webinar program. I do want to remind you that our webinar is recorded today, so if for some reason you don't hear it all or have to break away, we do have a recording of our webinars, as we do almost all of them. I can't say 100%, but we appreciate your attendance. We appreciate your time. So with that, I'd like to just visit with you about a couple incentives and programs going on with Insurance Agency Marketing. By the way, we did have our review today, our annual meeting as far as how we did last year here at our brokerage, and we had our best year ever in fixed annuities and single premium life, I might add. Was a banner year, and we anticipate an even better year in 2017, even with all the challenges that are out there in the markets of fixed annuities and fixed indexes. So we do appreciate your assistance. If you were a part of that, we appreciate your business, and we look forward to helping you in 2017. So I wanted to talk to you about a new producer bonus for those of you that have not written business with us before, or maybe newly contracted and don't know about this. If you're just starting to write, what a great jumpstart to your new year. This is all something that we strive to help you do within your first 180 days of writing business with us here. So as you can see, again, I'm showing, this is showing annuity premium, but at the $100,000, $300,000, or $500,000 level, these are the rewards that you can expect. I know cash is very popular, so we do try to accommodate special requests, but it's our way of saying thank you for placing your business and your trust in Insurance Agency Marketing. We do have a couple gentlemen, one that assists us especially in our webinar program. That is the same department that helps you with your branding and your prospecting needs as far as creative ideas. So if you are looking here in the new year at expanding, perhaps getting a better website or having a website, reaching to new people using email marketing, you want to visit with Adam or Josh in the creative department. They assist us a lot through the webinars. You may have seen their name on some emails that go out regarding webinars, but these are people you want to visit with to get some ideas of what you can do to grow your business this year, something maybe you haven't tried. So again, reach out to those gentlemen for assistance with branding and websites, things like that. We do have plans for an academy coming up in the spring. Don't have dates yet, but we do plan on having a life and annuity academy. So if you you are a producer, you're writing fixed annuity or life business now, and you want to hear about ways to grow that, you want to talk to people that are writing business through seminars or just writing at another level than what you're presently doing, and you would like to take advantage of that, let us know. Now, we will be, I'll be asking a question. In fact, I'll send it out right now. If you would like to learn about our Life and Annuity Academy, just please answer yes to that. But to tell you a little more about it, it's a 2-day training. Our agents arrive on Wednesdays, usually a Wednesday evening, and we depart at noon on Friday. So we crunch a lot of information in there, try to get you updated on what's strong in the marketplace, what's competitive, what the trends are, I know that one of the topics that will be going on at this 2-day training on this next academy will be the DOL. I know we'll be visiting about that, and also about IAMS Wealth Management, which has officially launched here. So we do now have our own RIA, and we're looking to grow that business a lot this year. So again, this is a way to help you, the producer. If you're brand new in the business, you're not writing fixed annuities, or you've been in the business but you're new to annuities, this may not be the academy for you yet. So we're looking for people that are writing the business, producers that are in there. So if that's of interest to you, you'd like to know more about it, we don't have the dates yet. I know it says call us for dates at the bottom of the slide, but as of right now, checked with Steve Murray just yesterday, we don't have an official date for our first academy. My guess it'll be March or April, and the goal is to have at least 2, possibly 3 academies this year. Okay, moving on. One of the things that's really helped us help you in our production and our business is the paperless contracting. So we recommend this for everyone. There are a few companies on the annuity end, and I don't know all the life, but I know there's a few annuity companies that will not accept this. So they have them, either you have to go to their website or they have their own paper contracting. But more and more of our producers are using the paperless, which means you fill out the forms, answer the questions that are on there, and it is a universal paperwork that is accepted by, like I said, a majority of companies. So when you get appointed, Great American or Athene or American Equity, whatever, you'll be able to appoint with numerous carriers at once. Going forward, if you want to add additional carriers for life or annuity and they're on this system, you don't have to fill anything out. So I recommend that, whether it's one company or 10 that you want to get appointed with. Okay, also on our website, some great tools on there. I use the website myself for quoting, searching for products, sometimes, unusual or difficult states with difficult ages. We utilize this as a complement to what we already have access to, but there is a grid in there that you can search by product, by design, and find products based on age, by premium, what have you. And it's something that you could access 24/7. Also, and I use this even though I'm in the annuity department, we do have a term quote engine, so to speak. So if you're searching for some strong term rates, you can use our website for that. Of course, we have all of our contact information in there, lots of tools for annuity and for life. Our current life and annuity news is available in there. So if you haven't been to our website, it's www.iamsinc.com. That's IAMSINC.com. Okay, moving on here, a couple other additional ways to make money here through us is our referred producer program. And everybody knows referrals are whatever it's at. I mean, this is how you grow your business. This is how we grow our business. So if you have individuals that are selling life, annuity, med sup, and they are not really getting the service they need or the recommendations, or they just don't have access to really good carriers, let us know. We'll contact them. As you can see, you can get paid for that too. And our marketing reimbursement program continues to roll on. We just finished it in 2016, but the balances in the marketing reimbursement didn't stop. So it's an ongoing program. You don't have to use it or lose it. Those dollars are converted for your production on index business and on single premium and target life. All has a conversion. All those pieces of business have a conversion for dollars going in, which you can use later for E&O. And I know a lot of E&O is renewing right now. You can use it for lead generation. You can use it for seminar programs, and you can build it up. If you don't use any of those, you can just continue to build it up. When you have a business expense, you let us know and we'll help you. We'll tell you what's available and how you can redeem it. Okay, with that, I'm going to hand over to Mr. Sean O'Connell at Great American, and he will be able to tell you a little bit more about what's new with Great American and what's what's competitive. And I'll let Sean go for here.
Great. Thank you very much, Jim. Appreciate the opportunity to share some ideas about Great American and our products and where they fit in today's marketplace. But I'll spend just a couple of moments filling everybody in on who Great American is. We may not be a household name, but we do have a very strong heritage. Company roots go all the way back to 1872. Started out as the German American Insurance Company 7 years after the end of the Civil War, so a long history. We are based in Cincinnati, Ohio. You can see a picture of our home office, which is the tallest building in Cincinnati. We are a publicly traded but family-run business. I say that, and I'll explain a little bit more about that, but we're about $52 billion in assets, again, traded on the New York Stock Exchange under the symbol AFG. So, as I mentioned, our family-run business, the Lindner family, and Carl Lindner Jr. is the gentleman picture in the middle of your screen. Mr. Lindner really was the quintessential American success story. He was a high school dropout during the Great Depression. His father had a dairy business, and along with his brothers and sister, he opened up a cash and carry store for dairy products in 1940, and he became very successful with that. That business is still around today. But as he grew in his stature, he started to take an interest in banking and insurance interests, and formed American Financial Group in the late 1950s. Mr. Lindner passed away about 5 years ago now, and today his two sons run the business. Carl H. Lindner III primarily runs the property and casualty side of the business, and Craig Lindner runs the annuity and money management side. And the family today controls almost 40% of the voting stock. So I say it is, I always tell people I work for a really big family-owned business. We are very strong in the annuities, as that is our only business on the Great American Life side. We do not do life insurance or long-term care or disability. We're focused on annuities. We're a top 5 provider of fixed annuities in financial institutions, and in the fixed index space, which is the majority of our business today, we are number 1 in financial institutions, and then overall we are number 3 in what we call our retail channel, which is the independent advisor and insurance agent. In today's world, the financial strength of a company has probably never been more important. We are A-rated from AM Best, A+ from Standard & Poor's. You can see that both of these ratings have been recently reaffirmed, and we've been A or better from AM Best for over 35 years. We actually manage our capital to an A+ level, but we've chosen not to pursue that A+ rating for a couple of reasons. One of them being in talking with our partners like Insurance Agency Marketing Services, they've expressed to us that they'd rather us have an A rating and have more flexibility to put into products and marketing and things of that nature, and then an A rating is a very salable rating. One of the things that sets us apart, I think, is also our experienced management team. As I mentioned, Craig Lindner has been with the company since he was in college. He's, I believe, been with our company almost 40 years now. All of our senior management, from our chief financial officer to our chief actuary and the like, all in excess of 20 years. Malat Neihart just retired as our chief marketing officer. Malat had been here well over 20 years, so we just hired a new gentleman, Tim Meinard, as our new, although he's new to Great American, he spent 29 years with the principal. I talked about our high levels of capital. Again, you'll never have to be embarrassed for placing your client in a Great American contract. Thanks to people like Imes, we've had tremendous success and growth over the last several years. In 2005, as a carrier, we were doing about $800 million in total annuity premium, and we need to update our slide to include 2016, but last year we surpassed just slightly over $4.3 billion of annuity premium. So we're very grateful to the partners that we have and the advisors that are out there promoting Great American. But you don't have that type of growth unless you have a quality product to back it up. And again, our service, I think, is exceptional in that regard as well. So I'll talk a little bit about a couple of our top-selling products and income riders. The American Legend 3 has been our #1 seller for the past couple of years. And one of the things that people like about Great American is our transparency and our simplicity. There's not a lot of smoke and mirrors, if you will. It's a 7-year fixed indexed annuity. Accepts additional premiums. So if you have clients that might be using it as a simple IRA, if you have a small business owner that makes annual contributions this time of year, the American Legend 3 is a great option for that. In today's world, we know we have to have some multiple crediting options. Obviously, we offer the annual point-to-point with the S&P 500, which is the most popular chosen choice. We also offer an 18-month annual point-to-point, so it's an opportunity to almost dollar cost average your deposits, if you will. And then we also offer gold. It's based on this SPDR Gold ETF, which is the largest gold ETF on the marketplace. A lot of your clients will watch shows on CNBC and Bloomberg News, and you can't go through a commercial cycle without seeing some celebrity talking to them about buying gold. Most people probably aren't going to go out there and actually buy gold bullion, but they might be asking you questions about that. This is an opportunity to diversify your clients' investment options within the fixed indexed annuity and still maintain that principal protection. And then we do offer 3 income riders or riders, an Income Secure, which is a pure income rider, an Inheritance Enhancer, which is our death benefit rider, and then the Income Sustainer Plus combines both an income component and a death component. All of our fixed indexed annuities right through age 85. So I know many of our peer group stop indexed annuities at age 80. So you have a longer period of time and you can find a solution for some of your older clients. One of the niches that not a lot of other carriers do is that we do inherited IRAs and inherited non-qualified. So if you have clients that have been inheriting an annuity from their parents or somebody, they have the option to do an inherited contract on that. Most of our contracts, including the American Legend 3, are available with a minimum $10,000 deposit. So it doesn't require a large upfront contribution. Again, as I mentioned earlier, the American Legend 3 offers additional deposit flexibility. Minimum deposits need to be $2,000. So it won't work if somebody's looking to do $300 or $400 a month. But if they wanted to do annual payments of $2,000 or above, that's certainly fine. We will take up to $1 million without any special approval on clients that are 75 or below, and then subsequently you can slightly reduce to $750 for 76 to 80 and $500,000 for ages 81 and above. As I mentioned, the appeal of this contract is its simplicity and transparency. It is a 7-year contract with withdrawal charges starting at 9% and declining 1% a year. So then after the 7th year, there's no surrender charges. And if somebody were to make additional deposits, say in year 2 or 3, the surrender charges are based on the issue date of the contract. So at the end of that 7th year, even if they had made a deposit 2 years prior, all of those deposits would be free of surrender charges. We do offer a 10% penalty-free withdrawal beginning in the first contract year. So if somebody has a need for that cash immediately, they do have up to 10% of their initial deposit in the first year, and then 10% of their account value in subsequent years. What you'll find with Great American is typically among the most competitive caps and participation rates that are available. We do offer a risk control strategy with the annual point-to-point, the S&P 10% vol control, a 60% participation rate, the annual point-to-point 5.25. Again, on the 17-month, 7%. The gold has a 5.5% cap on there, and this is the one product that we do offer a monthly sum or monthly cap, if you will, with a 2% monthly sum cap currently. So in a rising market, in theory, you could earn up to 24% on the contract. Our current declared rate is 2%, and then also importantly is our guaranteed minimum is 1% on 100% of the deposit. So the worst case scenario is at the end of the 7 years, this client's going to walk away with 1% compounded on their deposit. Of course, none of us like to work for nothing, so we do offer multiple commission options available. If somebody wants to get paid in the traditional HEAP commission, we will pay them $475 up front. If they're looking to maybe earn a little bit more over time and start to annuitize their practice, we'll pay $3.25 in the first year, 1.5% the second, and 1% the third year. And for those of you who are working with income riders, where that business is going to be on the books for all intents and purposes indefinitely, you may want to think about taking some type of a trail commission option, where you can take the trail AV, where you get a 3% upfront commission and a 50 basis point trail. That trail of 50 basis points is fully vested, so whether you quit writing with Great American and get terminated for lack of production, or if, God forbid, you pass away early on, those trails are vested to your beneficiary and will continue to pay as long as there's an account value. So if somebody had that contract on the books for 25 years, you'd still earn that 50 basis points until the account value dropped to 0. And then, of course, there's a full level trail. We know that in this day and age, many advisors are doing managed money as their business model. There's an opportunity to just take a full trail where you get 135 up front the first year and a 75 basis point trail for the life of the contract. The other contract that I want to highlight today is our number 2 seller, which is the Safe Return. And there's a couple of features into this that are somewhat unique to the industry and have really resonated with both advisors and clients. There's some differences from this to the Legend 3. This is a 10-year surrender contract beginning at 10% declining. But this is one of our contracts that has a little bit higher minimum deposit. The opening deposit needs to be $25,000 in order to open the Safe Return. And it is primarily a single premium contract. It will accept additional deposits in the first 60 days, so if there was multiple transfers from different sources, it'll allow that time to get those transfers in and have one contract. But if somebody wanted to make deposits 6 months or 2 years down the road, this would not be the option for them. It does offer a bailout cap on the indexing strategy. So if you've been around this business for any length of time, we have all seen contracts that issued with a very attractive initial cap, and we subsequently saw those caps get lowered in renewal time. We built in a bailout on there so that if it falls below a certain point, the client can walk away with the full account value. We do offer the uncapped earning strategy with the S&P Risk Control 10. The other unique feature to this is the return of premium guarantee, and it does offer, again, penalty-free withdrawals beginning in the first years. All of our income riders can be added to the contract up through age 85. So you'll see, much like the Legend 3, we'll take up to $1 million without any home office approval. We will do inherited IRAs and inherited non-qualifieds as well. We'll take both qualified and non-qualified. Primarily, we're looking at IRAs and things like that. We will not house profit return plans, defined contribution plans, or defined benefit plans, things of that nature. I mentioned the bailout on the cap, so your client will have the safety of knowing that the cap can't go below a specified point. In this contract, it's currently 3%. It does offer, again, the declining surrender charges and an automatic 10% available free out in the first year. The other selling point on this contract is the return of premium. Most of us have all met with clients at one point in time that objected to having to tie their money up for a number of years in case something happened. If you've had clients that have objected to the surrender charges, here's an opportunity to overcome that objection. This is built into the contract. It's not a rider. There's no cost for it. And it allows the client to access their deposits without any surrender charges. So basically, if they put in $100,000, if they want their money back in a month or 6 months, they're going to get $100,000 back, or they'll get the guaranteed minimum surrender value, whichever is higher. So typically the way it's going to work is if you have a client that makes a deposit and in 3 or 4 years there's been some interest credited to the account and the surrender charges have declined, the surrender value typically would be greater than what their deposit was, and they would get the higher of the two. Again, you'll find very attractive caps in today's environment. The S&P risk control participation rate 55%, and the annual point-to-point on the S&P 475. You can see the bailout cap at 3%. And again, worst case scenario is that they earn 1% on 100% of their money for the life of the contract. On all of our contracts, we offer multiple commission options. If you are interested in that upfront commission, it's 5.5%. 3-year payouts at 4.75, 1.5, and 75 basis points. The trail commission option, which is very attractive at 4.25 up front with a 50 basis point trail. So you can see that usually by those trails are also paid quarterly. So by the time you're into the 3rd year, the advisor is well in the black on maximizing his commission. As I mentioned, we do offer 3 riders. I'm going to highlight 2 of those today. And each of those riders can be added to any of our index contracts that I've spoken about today, as well as others. They do have to be selected at issue, but they can be added to any contract as long as the contract issues, which is through age 85. So you can actually add an income rider or a death benefit rider or somebody who is 85, as long as they haven't had their 86th birthday. So the Income Secure is our pure income rider, and the Inheritance Enhancer is our death benefit rider, and those are the 2 I'm going to talk about today. So our Income Secure rolls up at a guaranteed interest rate of simple 9% simple interest, and that is for up to 10 years. You can add this rider to any contract as long as the client has not turned 86 years old. Income can start as early as age 55, and the charge for this rider is 95 basis points. One of the things that we do that again is unique is if someone passes away and they have not yet started the income stream, we do refund the charges for the rider back to the death benefit. So if you had a client that bought the rider, had it for 3 or 4 years and passed away and hadn't yet started income, we'll refund those charges back as part of the death benefit. Client does have an option of choosing both a single or a joint payout. They make that decision at the time that they want to start their income. So if they're unsure when they buy the contract whether they want for health reasons or whatever the case may be, whether they want a single or a joint payout, they don't have to decide that until they're ready to turn that switch on and start their monthly income. We also do ratchet our payouts in 10 basis points. So I know many of our peer group band income payout percentages in 5-year bands. This way you don't have somebody trying to defer starting their income until they have their next birthday and get to the next band. 10% change is not going to be a huge difference, but a 50 basis point change could be a significant difference in their payout. So you can see at age 65, a single life payout would begin at 5%. If they deferred that to age 69 before they started their payments, they would get 5.4% payout. Joint lifetime income is 100 basis points less than what the single life is. So you can see that a 65-year-old taking a joint payout would get a 4% payout. Of course, our compliance department always likes to say hello to folks. And then our second rider that I want to talk about is our death benefit rider. One of the things that industry studies indicate is that the number one concern of clients is outliving their money, and then their number two objective is to leave a legacy. So if you have clients that are talking to people, and mention that they have money set aside for their children or grandchildren, and it seems to be everybody likes the grandchildren better, so it seems that most of the money is getting left to them. This is a great opportunity to maximize that wealth transfer. Many of you may be doing single premium life as a way of making that wealth transfer and maximizing death benefits, but I'm sure that you come across people that are uninsurable or unwilling to submit to underwriting. This is a great alternative for that. So again, this can be added to any contract that we offer, 8% simple interest roll-up for 10 years. Again, it can be added as long as the client has not turned 86, so you could add it to an 84-year-old and it would roll up to age 94. They can choose the beneficiary and they get a payout of either a lump sum or a payout, whichever the beneficiary chooses. And again, the cost of this is also 95 basis points, and it is refunded at death in the first 5 years if they have not obtained that 5th contract anniversary. Since there is no underwriting on the contract, we do ask or require that the client live for 5 years. So the enhanced death benefit rider kicks in after the 5th contract anniversary, and that's kind of our way of eliminating the underwriting and preventing anybody from prospecting in the hospice wards. The way it works is prior to 5 years, if the insured dies, and there is a designated insurance, if it's a joint-owned contract, there is one person designated as the insured on this. A spouse can assume the rider as well. So if it was a husband and wife, and it was even if it was in one name or joint owners, and one of the spouses died in the first 5 years, and the other spouse wanted to continue the contract with the roll-up and rider, that's certainly permissible for spouses. If they die in the first 5 years, as I mentioned, any rider charges are refunded back to the account value, so it's not a use it or lose it proposition. They don't, worst case scenarios, if they've had an indexed annuity with a guaranteed 1% minimum on their deposits, so they outperform most of their other fixed money instruments. After that 5th contract year, the enhanced death benefit is available, and then at death, the beneficiaries have a choice to take either a lump sum or a 5-year payout. And actually, I say 5 payments rather than 5 years, because the way it would work is we'll make the first payment as soon as we process the death claim, typically within 45 to 60 days, and then the subsequent year would make the next payment. So it usually works out to be about 4 years and maybe 45 or 60 days. But we also know that sometimes people want that cash up front, so we will pay a commuted value, which is the average between the account value and the benefit base amount. So in my example here, if you had a $100,000 account value and a $170,000 enhanced death benefit, the lump sum payout would be $135,000, and the 5 payments would be $170,000. I also point out that the 5 payments could be longer. So if you had somebody that maybe was successful, didn't need money, and didn't want to pay the taxes on it, they could take that payout over a longer period of time and defer those taxes. Again, our compliance department has to say hello to everybody. I also want to point out a couple of things on our website. GAConnect.com is a wealth of information in terms of marketing material. You can run illustrations. You can see in the lower right-hand side, it'll take you to the illustration. And then we also, for those of you interested, we offer e-business where you can submit your applications electronically, eliminate your NIGOs, and speed up getting paid. We do have a sales desk that is available from 8 a.m. to 5:30 Eastern Standard Time. All of the folks on that desk are insurance and securities licensed, so they understand the challenges that you go through on a day-to-day basis. very knowledgeable and helpful in terms of case consultation or getting you illustrations or whatever your marketing material or any of those type of things. With that said, I'm happy to take any questions that might be out there.
And thanks, Sean. I do have, there are a couple questions that some agents are asking. One of them was, does Great American publish their index renewal rates?
Well, on the American Legend 3, we do, and there's a piece on our website showing what those renewal histories are.
Okay.
We don't publish them on the Safe Return because of the bailout provision in there, so they know that they're never going to go below that 3%. But we do have a very strong renewal history for anybody that has worked with us for any length of time. Our goal is never to lower those caps significantly, but obviously we saw some environments over the last 6 or 7 years where interest rates, we didn't assume that interest rates would stay as low as they are. So, but you'll still see that most of the time, in fact, I believe almost all the time, our renewals of contracts that were issued 6, 7 years ago are still renewing higher than what new money rates are today.
Okay, thanks. Another question here was regarding the bailout cap, and is that? I know you went through that, but is that by per strategy? So, or so if a client doesn't have money allocated in one of the two strategies and it goes below, it only triggers. So, is the whole contract become available without surrender, or just the portion that's in the?
Just the portion that's in that indexing bucket. So, for instance, if somebody had 20% of their contract in the fixed rate and we pierced the bailout, they would be able to remove the portion that was in the indexing strategy, not the portion that was in the declared rate.
Okay.
Good question.
So they could, if they wanted to, they would be able to exchange it out, that percentage? Is that what you're saying then?
Well,
let's say you had
to surrender it.
Okay.
They could move without any penalties or chargebacks to the agent. And then if they decide that, let's say, for instance, they decide that they look around and, we may have pierced a bailout, but there's nothing better out there, for instance, then that new, so if we renewed it, let's say, just for example, at 299, and they decided to stay, if we ever went below 299, then they could leave it the next time we reduce that.
Okay. Okay. I don't have any other questions right now, but I did want to launch another last question here, and that is if you would like to get more information about Great American, be appointed, or in particular the two products that Sean visited about today, which is the Safe Return or American Legend 3, let us know. Just answer yes to that question. We'll be glad to get some information out. I've worked with Great American for a number of years personally and as a marketer, so they're one of the carriers that I know quite a bit about and have worked with. So if there's any questions you have about how their products work and where they fit, again, these are just two of their more competitive products. They have, I believe there's 3 other index products and several other traditional fixed products in the portfolio. So certainly let us know what we can provide to you, any more information, and be glad to answer questions about it too. So we appreciate your time today, and Sean, thanks so much for sharing this information with us. We look forward to having a good year with Great American, and you all have a good rest of your day Thursday, and we'll talk to you sometime soon. Thanks so much.
Thanks, Jim.
Mm-hmm.